So the US election is really getting going, and it's likely to heat up even more over the next few months before November 5th and the elections take place. So that got me thinking a little bit. What impact do the US elections actually have on the stock market? Thought I would do a video on this. I took a bit of time to do a bit of research. Stick around to the end of the video because I've actually got some data on what your returns would be like if you invested only when Democrats were in power or only when Republicans are in power. Some really fascinating stuff, so stick around to the end of that and we'll tackle everything US elections and the stock market in today's video. Hi, I'm Jeff. If you're new to my channel, I've been working in the finance industry for around 20 years now, worked with hundreds if not thousands of clients over that time period, talking to them about the financial markets, their accounts, all the different asset classes. I want to pass off a lot of that knowledge now to people like you. So if you want to learn more about finance, saving money, investing money, subscribe to my channel. You get a lot more good content like this. Also, I just want to make you aware that all of my videos are not financial advice. They're really just for educational purposes only. They're not investment recommendations. If you really need financial advice, then seek out a qualified financial advisor. And when you invest in the stock market or pretty much anything else, your capital is at risk. With that out of the way, let's get into this video on the US elections. So first of all, how do stocks typically perform in election years? The consensus seems to be, with people I talk to, is that generally they're going to be good years because the incumbent president, who's now got control of the White House, is likely to push policies that are conducive to the stock market doing well. We've certainly seen a great start to the year this year. The first half has been fantastic. That really holds true throughout history when you look at elections over the past. T. Rowe Price has done some really good work on this, some analysis, and let's look into the data a little bit deeper and just see if that actually is true. On election years, the stock market tends to go up. So as I mentioned, T. Rowe Price did a little bit of analysis on this and found out something very interesting actually. Despite the consensus that stock markets tend to go up in election years, if you look at this graph here, you can actually see that they underperform slightly compared to non-election years. The difference is very minimal, less than 1%, so it could actually just be statistic rounding errors, these sorts of things. But unlike popular belief, the stock market doesn't actually tend to be higher most years when it's an election year. So that's something good to know. This year it's obviously been a bit different. The market's up around 15% at the moment year to date. But generally speaking, during election years, stocks don't always tend to outperform non-election years. So what about individual sectors? A lot of people tend to think, you know, for example, that one party has certain policies that'll benefit certain sectors over others. So for example, you may recall that when Trump got elected in 2016, there was a lot of fear given his trade policies towards China in particular. Companies who depended on China for their manufacturing would actually have really poor results under the Trump presidency. And he certainly did raise tariffs, and there was quite a big trade war, if you remember, in those days. But in actual fact, if you look at some of the data that Morningstar has put together, if you look at Apple, a company with a phenomenal amount of exposure at the time to China, they actually performed quite well. So there's a little bit of a misconception in how sectors are going to perform depending on which political party is actually in control. To take the other side of the coin, if you look at when the Biden administration came into power, a lot of people thought that that would be a problem for the energy sector. But if you look at this chart here, again put together by Morningstar, you can see that the energy sector actually did phenomenally well under Biden and outperformed the general stock market. So some of the perceptions that we have in terms of parties and whether it's, you know, an election year, so therefore stocks will come up, they don't seem to be playing true. So this is something worth knowing. Another popular belief that during election years, there tends to be a lot more volatility in the markets. If you're not aware what volatility is, really just think about, you know, kind of the magnitude of price moves in a particular period of time. So for example, if the S&P 500 was up 2, 3, 4, 5% a particular day, and then down 2, 3, 4, 5% the next day, those are larger than normal moves and a shorter than normal time period. And that is a measure of volatility. Now, how do we look at volatility to get an idea of where it's at? Well, there's actually an instrument that trades on the CBOE known as the VIX, which is just the volatility index. And that really just looks at options contracts based on the S&P 500. And all you really need to know about this is the VIX spikes when there's times of high volatility. So if you look at some of these charts here, for example, you can see two big spikes on the VIX that are mainly down to the global financial crisis, where we had extreme volatility. We're talking 7, 8, 9% moves in a day. COVID pandemic, similar things in March 2020, unbelievable volatility in the VIX spike. But when the markets are quiet and not really moving more than say 1% in a day, then the VIX tends to go quiet, it goes low. And lately it's been trading, $12 to $15 pretty much through the year. This is very low by historical standards. But do we see more volatility and therefore a spike in the VIX as we get closer to an election? Well, Morningstar has looked at the data, and when you see in this chart here, you can actually see that volatility does tend to be a little bit higher in election years. This is not surprising. Why? Because elections tend to bring a little bit of uncertainty, and the markets hate uncertainty. So expect a little bit of volatility over the next few months. I wouldn't be surprised at all if we see the VIX go up and we see, more movements, more volatility in the main indices like the S&P 500 between now and the index. But I consider this to be completely normal and not anything you should be particularly worried about. So which political party tends to be better for stocks? Well, the Bespoke Group actually looked at this, and the results are pretty interesting. So they went all the way back to 1953 in Eisenhower's inauguration up to 2023. And if you had invested $1,000 only when Democrats were in power, that $1,000 in 2023 would be worth around $61,000 today over that time period. Now, if you only invested when a Republican was in power in the White House, the same $1,000 would be worth around $27,000 today. So there's a really big difference there in terms of political parties and outcomes in the election. I found that really interesting. But here's the most interesting bit. I mentioned this at the beginning of the video, and this just drives the point home of just how important it is to remain invested. So if instead of investing only when Democrats were in power or only when Republicans are in power, if you put $1,000 into the stock market at the same time, and that's at the inauguration of Eisenhower in 1953, and you just kept it invested through both political parties, you ignored politics, well, in 2023, that $1,000 would be worth around $1.6 million. That's right, just under $1.7 million actually. And that is a phenomenal return. And the best thing about that is you didn't even need to think about politics. You didn't need to adjust your portfolio around politics, preferring one party over another. So this is really interesting. And you'll hear this a lot on this channel, but the power of getting invested and most importantly, staying invested has proved true even through politics. So that's my video on the US election in the stock market. At the end of the day, I think it's safe to say you can expect a little bit more volatility probably between now and the election time due to uncertainty. The polls will probably sway this a little bit, and no doubt on the day of the election and the night as the election results are coming through, we're likely to see some volatility, and then it should smooth out after that. But don't worry about it. It's not a big deal, and it's completely normal. We've had very little volatility. We're due for some, I think. That's just my opinion. The other thing you really want to take away, don't get tied up into which party wins and how that's going to benefit this sector or that sector. It appears it doesn't really hold true. The main thing is that you're invested into the market, you are diversified, you're comfortable with the risk that you have, and you stay invested. Ultimately, the political events that happen in the US this year with the US election is really just a political, slightly volatility event. It's not a fundamental event, and you should always be thinking of your investments based on fundamentals and long term. So don't worry about politics, stay invested, and think about the long term, be diversified, and your results will be fantastic. That's my video on the US election in the stock market. If you liked it, why not subscribe to my channel, get more videos like this, share it with a friend. Perhaps they benefit from this information as well. Like, subscribe, give me a comment as well. Let me know what you thought of it. What are your thoughts on the US election in the stock market? Let me know if there's any other videos you want to see, and I'll see you in the next one.